Hey guys, and welcome to today's video. So in today's video, we're going to be reinforcing the idea of the top-down analysis we shared earlier on this channel. For those of you that still yet to see that video, you can see that video. I'll share the link somewhere around this video or in the description section. So this is the Nasdaq right here, and this is the markup I had for my top-down analysis. And if you watched that video earlier, I told you the first thing, the ideas you want to have is number one, you want to be focused on a minimum of 3 or more time frame. Number two thing is you want to identify the key PDRA levels from the highest of the time frames and narrow it down to the current time frame which you're going to be trading or executing on. And the last thing I said is you want to pay attention to institutional flow because that will tell you when you should be entering and when you should be exiting. So to reinforce that idea, this is Friday, the last day of this week, and this is finally the market has traded all the way from Buyside liquidity down to the Sellside liquidity. And mind you, at the time I made that video, we're just around this particular area in price. We're actually buying up into this particular Buyside liquidity. And you can see the moment price tapped into that Buyside liquidity, you can see the way sold aggressively, just in a one-way move all the way to the Sellside liquidity. And this all the way from Buyside inefficiency down to sell side inefficiency. So that's the way it moves, right? All the way into the daily fair value gap down to the weekly fair value gap right there. So to just reinforce the idea, let's go to the weekly time frame right here. Let's look at the weekly time frame. So this mark up here, this line here, I'm going to just remove it so we can see things clearly for ourselves. So I'll zoom it sideways so you can see. So looking at it here, we see we marked out all the whole levels. This is that particular fair value gap on the sell side. These are those lows. This particular weekly low. This is the equal lows we first targeted earlier in the week. This is the void, and this is that particular order block, and also the overlapping with the daily fair value gap. Then when we drop down to the daily fair value gap right here, sorry, the daily time frame right here, you can see that we have the daily fair value gap from this high to this particular low. That's where we have the daily fair value gap there. Then that particular upper shaded area is the weekly order block, and you can see the weekly order block mean threshold if price is to push higher. So you can see market opened here on Monday and traded lower first, attacking these equal lows on the sell side, and you can see the rejection all the way into buy side inefficiency. So which is also buy side liquidity. You can see where price traded there into that particular area right there. And how would you have capitalized on this particular buy move? Let's just look at that quickly. So since we saw price trade into that particular area, so what we're going to do if we're trading that in real time, so let me bring, this is where, mind you, this is where the week started on this particular candle. So with some Monday price traded into that particular equal lows right there. For those of you still wondering, it is actually, you can see it's the markup here, equal lows right there. So price traded into this particular equal lows right here, and you can see all we're waiting for right here is, since we see price traded from the highest of the time frame, which is the weekly time frame, we are looking at it there from the weekly and the daily. We're waiting for it to tap into a PDRA that we've outlined all the way from the highest of the time frame. That's what we're waiting for. The next thing we're looking for is institutional order flow. So now price drop into this particular area, and all we're waiting for is displacement in price. Because mind you, I told you about institutional order flow. You need for you to understand institutional flow, you need to understand point of origin, displacement, and okay, let me take that again. Point of origin, displacement, and where is price respecting? Is price now respecting highs and is it respecting lows? So you want to focus on that particular area, those particular sequence, or you can call it area of value. You get, depending on how you want to call it. So point of origin, displacement, or area of value, or what side is the market respecting and what side is the market taking out. Have you started seeing the market respect lows, or have you started seeing the market respect highs? That will determine if the particular displacement is confirmed in that direction. So you can see that price tapped into this particular area and displaced to the buy side. Now we can see we have a point of origin from this weekly equal lows right here. We have a displacement. Now the next thing we're looking for is what areas of is price respected, and now we want to focus on lows. So these are the lows right here. We can see that price has taken out this high, price took out this original highs right here. So we don't want to see price attack any low. You understand? So even though it's to attack any low, we want to just see a sharp move, a sharp run away from that particular low. So this is where you can actually start refining your entry. And mind you, we still have we've not yet tapped into this particular daily fair value gap on the buy side. So we still have more buying opportunities. So all we are waiting for is to see how we're going to capitalize on that move. And I told you guys I entered this trade to the buy side. I showed it on that particular video. I entered this particular trade using this 4 hours order block. So the moment I saw this candle retrace into this particular order block, this series of down close candle, I started buying on that particular level, and I held all the way into that daily fair value gap. So let's say you don't want to use the 4 hours as your area of entry. So what you can implement is the ICT silver bullets for your entry. So and that will warrant you staying on the 1 hour to watch price. So you can see at this particular area right here, this is 19 charts time, 19 to 20 charts time. So this is the PM session for the Nasdaq. So also aligning with the 3 to 4 o'clock PM New York time ICT silver bullets kill zone. So you could actually capitalize on this particular area right here after the run on this particular liquidity. So this would have been your setup all the way into that daily fair value gap. So the moment price traded into that particular daily fair value gap on this zone right here, all we're waiting for is a reaction in price. And you can see this particular reaction in price because mind you, we're already very short away from the weekly time frame. So a reaction in price, this was all I saw, and I went down to the 5 minutes. I'm just recapping this trade actually for the benefit of those of you that want to see how I took it. So the moment I saw this break of structure right here on the 5 minutes, you want to say I already knew we were going to sell because if you look at it from the weekly perspective, we have institutional order flow to the sell side. So we can see that prior before this new week started, we saw this push to the sell side attacking this low. We saw price drive into this particular area and give an impulse sell. So all I was waiting for was another retracement to start selling. So that was why I was capitalizing on that. I was capitalizing on the 5 minute entry right there. So I wasn't just doing lower time frame because of I wanted to do it. I was doing it because of I have a context in mind and um, the analysis I've arrived on. So, and again, this whole weak rejection supported the idea. And if you look closely, you can see this an institutional market structure shift. For those of you that have spoken about this, is the M pattern. So you can see price move higher, came down, went higher, came down, broke structure on this level. So that is the entry right there. So entered here, put stops above here, right there. So, and I held this trade on the from the 1 hour all the way to this particular equal lows right here. I didn't hold into this particular area, but you can see based on precision and top-down analysis, you can see that though I did not hold this trade from this level to this particular level, I got out at this particular low, which is very reasonable. You can see that prior to the next day, which was Thursday, you can see the way price gapped at this zone and traded all the way to that particular um, sell side inefficiency in the marketplace. So you can see right here, this is how you apply that top-down analysis, just the way I've explained it in that particular video. And you can see how it played out even in this particular week. We're going to go forward into next week and still anticipate using this particular method from the weekly time frame, the daily time frame, the 1 hour, and include the 4 hours and the 5 minutes at for area of precision as we keep going on. But majorly the way I applied is the weekly, daily, and the 1 hour. So without further ado, I hope you find value in today's video. Hit the like button, hit the subscribe button. If you don't understand a lot I went over into this video, you can watch the previous video, then come back and watch this one. And you can also leave your thought in the comment section. I also recommend you watch this video a couple of times to better engrave the idea in your mind. Until next time, see you in more video.